Hey traders, welcome back to the weekly Forex Forecast. Last week was actually a pretty impressive week for the markets. Why? Because we saw some big moves. We saw some volatility coming into the markets. And it looks like we've now got a regime shift taking place. And we're going to discuss that a bit more in today's video, especially when we look at the quantitative data in HedgeDash to show and confirm that, yes, it does indeed look like we've got a new regime. So if we're looking at euro dollar here, I wanted to start off just by looking at this on the weekly chart, because look at this. I mean, we're nestling into, remember in the 4-hour chart, we talk about the fact, in weekly Forex forecast videos where you get the breakdown, that first pullback into the moving average, 20 moving average, 30 moving average. But you get that first pullback and then you get the sell-off very often into the lows. You get that kind of bear flag opportunity. Well, we're seeing exactly this in euro dollar, but in the weekly time horizon. So that's telling me we have most likely, starting from next week, a number of weeks to come to the downside in euro dollar. And it looks like that's the bottom of the correction that we've been seeing in the dollar index. So if we are going to have the next leg down, it's difficult to see how we don't come down to the prior low, because this kind of setup, you get a high, you get a pullback, attempt to make a new high fails, and then you get a break, pull back into the moving average and the move away. So I'm looking at this and I'm saying, well, this is actually pretty risk off. If we're going to get this move from the US dollar to the downside, why are we going to get this? What's the reason for this? And does other data confirm what we're looking at here in terms of dollar strength in the coming weeks and coming months? And the answer, as we're going to see in today's video, is yes. So before we move on to portfolio selection, let's just have a quick look at the 4-hour chart on euro dollar. And we have a confluence of timeframes, right? We have this same setup now taking place on the 4 hours as we've seen in the weekly. And this is where you get big moves. So we get a pullback, nestles into the moving average, and that move away, kickstarts the next leg down. But you then extrapolate that out into the weekly, and that kickstarts the next leg down in the weekly. So I'm looking further downside. It's shorts only for me in euro dollar. I think there are better markets to actually trade next week, and we're going to be looking at those in today's video, but only shorts for me in euro dollar next week. If you are looking for the kind of intra-week breakout, back to the moving average, down to the profit-taking target next week of the 1.0274, although that is a near-term profit-taking target, again, I do think we could have a number of weeks, if not a number of months down now in euro dollar. What I'd really like to see is, I'd like to see this even break through the moving average, pull back, retest the upper bound at the 1.0480, because that's where we become overbought next week in euro dollar. This is where we enter the sell zone between these levels. And of course, this is the buy zone. But if I only have a short bias, it means that this is only for booking profits and this is for taking positions. So if we do pull back, I'm going to be looking at that to the downside for a 1 or 2 day reversal. But again, could even potentially be a fundamental trade you could hold on to for longer. If we end up breaking all the way through, and this is highly unlikely because we've just had that reversal, and actually we saw last week a number of markets taking out second upper and lower bounds. What does that mean? Well, again, it's a sign that quantitatively we're getting a regime shift. And what regime shift is that? It's actually, as we're going to see, from kind of inflation to deflation. And of course, what benefits in that? The US dollar is one of the assets. So if we do blast through and take out the 1.05838, this is a place where I can take a second position for a 1 or 2 day reversal to the downside, whether I'm short already or not. However, I don't think it's going to come up there, but as a backup plan, as a plan B, that's the level where we become extremely overbought next week. But in my opinion, that is extremely unlikely. Okay, so moving on to the portfolio selection, and look at the quantitative data in front of us. This is screaming to me a very specific message about what's happening in markets. So before we talk about going into a new regime, let's back up a little bit. Where were we before? We've been in an inflationary regime. We've been seeing the Japanese yen underperforming. We have for quite a while been seeing some of the commodity currencies outperforming, especially as crude oil was moving higher. It has now reversed, but we've been in an inflation regime, and as inflation data has been coming out for quite a while, I mean months, even going back into last year, the markets have been reacting to that, often in a knee-jerk way, that the markets are concerned about an inflation shock. In other words, inflation starting to pick back up, and that really has been reflected in the markets. Now, let's fast forward to last week and ask ourselves a question: what happened last week? What changed? Well, usually you get, maybe on the CPI, you've got an inflationary regime, CPI comes out very, very soft, and basically, markets look at that and say, well, we've got a softer CPI, maybe now the risk is, to growth. Okay, so CPI, maybe the press conferences, the interest rate decisions, you can preempt regime shifts on those as well, because the central bank comes out, they change their forward guidance, and the market enters a new regime. Whereas last week we kind of had this on, first of all, what looked like the weekly claims. So weekly claims come out and they are worse than expected. And this is despite the inflationary components coming out hotter in GDP last week. We get those weekly claims and we start to see the markets responding. We then get on the Friday, the Atlanta Fed guiding GDP lower to minus 1.5% for the current quarter. So the quarter that we're in. And we're coming towards the end of the quarter now. And again, we start to risk off. So what we've seen here is we've seen a shift from a kind of inflationary regime where markets are trading around inflation and preempting potentially another inflation shock to essentially a growth shock, or concerns around a growth shock. So that inflationary regime to a deflationary regime. And so we come and look at the quantitative data this morning and we ask ourselves a question, quantitatively, we've looked at the fundamentals and the economic data. Quantitatively, are the markets responding to this in a way that we would expect? And the answer is absolutely yes. I mean, it couldn't be clearer. Not only do we have the risk-off currencies near the top and the commodity currencies at the bottom, but they've actually aligned in order of the most risk-off to the least risk-off, almost, give or take one or two currencies. So if you look at the Japanese yen, and the US dollar and the Swiss franc, three safe haven currencies, the yen is actually the number one safe haven currency. The dollar is number 2 and the Swiss franc is number 3. So to the short side, the Aussie dollar is actually the most risk off, but still pulling down the bottom here, the Canadian dollar, the Aussie and the New Zealand. This is a crystal clear quantitative signal that was a real regime shift last week. And that actually confirms not just that we're looking at potential bottom in the dollar, but also that equities are likely going to start to see downward pressure as well. And I think we've just started and we're going to get further downside selling in equities. And that's going to continue to bring risk off flows into Forex, because that is exactly how the markets are setting up quantitatively that we should be, in all probability, looking at positioning for now. So coming up next week, what do we have? We've got non-farm payrolls on Friday. And this is probably why weekly claims had such an impact, because although non-farm payrolls is more important, institutions, hedge funds, and investment banks, they use the weekly claims as part of their calculations to predict non-farm payrolls. So what we're seeing is, based on the weekly claims last week, we're seeing positioning in the markets where essentially some of the big players are obviously thinking that non-farm payrolls are going to come out poor, and they're positioning now before the data actually comes out, and then they could probably use the liquidity on that data to exit their positions. And this is why you get that non-farm payroll setup, it whipsaws, and actually that's a really good setup to trade. And we trade it with GMT members on the non-farm payrolls day when the opportunity arises. Now, coming into this week then, where do we want to, to summarize, be looking preferably in terms of positioning? I'm going to be looking at Japanese yen longs. I'm going to be looking at US dollar longs, and I'm going to be looking next week at Swiss franc longs. Now, you could also look at the pound. So pound New Zealand to the upside, pound Aussie to the upside, pound CAD to the upside. However, out of these two, the Swiss franc is a safe haven asset. And yes, the UK has inflationary problems, and this is keeping rates high relatively. This is why we're seeing the pound outperforming. But if we start to see a sell-off in equities, as I think is probable over the next few weeks and the next few months, then we're going to most likely see the Swiss franc outperforming the pound. So for that reason, I prefer the Swiss franc, but you should also see the pound outperforming the commodity currencies in risk off. To the short side then, of course, it's a perfect setup. We're looking at New Zealand dollar to the short side, Aussie dollar to the short side, Canadian dollar to the short side. So we're just looking at the safe haven assets versus the commodity currencies which suffer the most during risk off. And also, the European majors sitting in the middle, the pound, the franc, and and the euro tend to underperform the safe haven assets in risk off, but they tend to outperform the commodity currencies in risk off. So with that said, I'm going to be looking in today's video and at the top of my watch list for next week at New Zealand yen to the downside, Aussie yen to the downside, CAD yen to the downside. We're also going to be looking at New Zealand dollar to the downside, Aussie dollar to the downside, US dollar CAD to the upside. And we're also going to be looking at New Zealand franc to the downside, Aussie franc to the downside, and CAD franc to the downside in today's video. Okay, so kicking off the watch list as always with crude oil. Now, if we are heading into a risk-off kind of deflationary regime, and a regime where investors are more concerned around growth than inflation, what does that mean for crude oil and commodities? Well, especially crude oil, but commodities in general. They do well in inflationary regimes because the price of commodities go up, and in deflationary regimes, investors sell commodities, they sell crude oil. So certainly going into next week, it's not a massive short, but it is a short in my opinion. So I personally want to be looking at short opportunities, which by the way doesn't mean crude oil can't rally next week. If crude oil does rally, it means I'm going to be looking at shorting it. So if we start to see crude oil pulling back, and I would like to see crude oil pulling back, I'd like to see momentum, I'd like to see this ideally push into the sell zone and take out this high. That would be a great key resistance. So we enter the sell zone, start to look to the left. Where is the resistance here? Where are the price points that previously reversed this asset lower, in this case crude oil? And the answer is, right at this high. So if we do push through and we take out this high, this is going to be a great place to start to look for a 1 or 2 day reversal to the downside, back inside the range. If we push all the way through, and this is never really, usually an initial position for me, this is kind of a risk management level whereby if I'm already short and it pushes against me, I can, because the odds for a reversal increase greatly, I can pull the trigger on a second position. But this will be the second place I'd be looking for a 1 or 2 day reversal to the downside, although it's not expected to take this level out. Roughly only 5% of the time do we expect these levels to be hit. And if we start to pull back and we get a fast market, so you might see this pulling back, the moving average follows it. And then what happens is it's so weak that you can't actually get into the sell zone, and you end up getting a momentum breakthrough, just like this. Pulls back into the moving average, and that sets up your bear flag setup. Moving average follows it, sets up your bear flag setup into the buy zone, which for me is just a profit taking zone next week at the 67.61. So I can either short crude oil or do nothing in this market next week. I cannot buy crude oil next week. Okay, so kicking off the Forex markets before we run through all the way to the end of the video with gold and silver, we're starting with the Japanese yen pairs. This is my favorite theme going into next week. So Japanese yen long is my favorite theme. And the Japanese yen pairs are my favorite pairs heading into next week. So just a quick side note, we're not looking at the euro really in today's video because I don't think it's one of the best markets to the upside or the downside. We did look at euro dollar, but if you are trading the euro pairs, just bear in mind there is the ECB next week, so you want to keep an eye out for that in the economic calendar if you're trading those pairs. So starting with New Zealand yen, what I'd like to see is we've got really nice momentum to the downside. Prior low over here, you can see this is trending down in the 4 hours. I'd like to see this pull back, test the underside of the prior low, and at the same time push into the sell zone, because this is where we become statistically overbought during the week. This is where we're likely to get reversals once we start to enter this zone. So if we do make our way into there, this is where I'm going to start to look left. There is pretty much, this is the first high over here. So this would be good. But I do really like New Zealand yen to the downside. I'm going to be looking at this setup for a 1 or 2 day reversal. If we blast through and we take out the second upper bound, this is where I'm going to be looking also for a 1 or 2 day reversal. Although, do I think it's going to take this out? No, I don't think it's going to do that. I think it's very unlikely it's going to do that, especially as we've been seeing abnormal momentum to the downside. You'd need a trend reversal. What's going to do that? We've only just had a regime shift by the looks of it last week. So that would be the second position, but I don't think it's going to come up there. The third and final thing you can look for is a fast market where we're pushing into the sell zone. Maybe it hits this low, right? This is where you can look and say it hits this low, and this previous broken support turning resistance is preventing it from moving into the sell zone, okay? So then you get a sell-off from there, and that is a very good hypothetical of where you can get that kind of bear flag set up into not just the prior low, but down to the profit taking target next week at the 82.95. Next is Aussie yen. Now I can either be a seller or do nothing, cannot buy this market next week. I'd like to see this market moving up into the sell zone, which is above the 95.00. Looking to the left, there's a nice low and there's prior highs here. So we've got a nice kind of zone right here where we can look at this and we can say this is a good sell zone. If we start to break into here, this is where we can look for momentum to fade, for bulls to start to lose confidence, and then you get that 1 or 2 day reversal to the downside. And that's really what I'm trying to capture. I'm trying to capture each week in each pair 1 to 2 days out of 5. That's what I'm trying to get. And these are the setups we look at in real time. With GMT members, I trade them in real time. We send them out in real time, and also we track them and statistics every single Monday in a weekly report. So this is not just theory, this is practical. This is practical stuff that I'm doing every single day during the week. If we blast through here, I don't expect to take out the 96.50, but if we do, this would be the second place. I'd be looking for a 1 or 2 day reversal, whether I'm short already or not. Again, it's more of a backup. I'm not expecting this to happen. And the third and final thing is that kind of bear flag setup. You know, we come back, we take out the prior lows over here, and it struggles to actually get into the sell zone, and then the buyers give up. You get a break back down below with momentum. The moving average follows it, and you get that potential bear flag setup. Doesn't happen all the time, but it happens a lot of the time. Certainly way, way, way more than you need to get a significant edge. But a really nice intra-week bear flag setup down to the 92.01. And the final yen pair is CAD yen. Can only be short or do nothing. Buying this is not an option. I would like to see this enter the sell zone, which is above the 105.76 next week. This is a really nice high. Sits below the kind of midway point, exactly what I'm looking for. If we can start to get buyers trying to break above there, then I'm going to be looking, see if the momentum starts to fade, look for those double tops, head and shoulders, and I'm looking on the lower time frames for the buyers to run out of steam. They liquidate their positions. That gives you a really nice reversal for 1 or 2 days lower. If we end up at the 107.40, I don't expect it, but it would be the second place I'd consider pulling the trigger on a short for 1 or 2 day reversal. And the third and final thing, as always, we get up, but we can't make it because the market's so weak. And instead of getting into the sell zone, so we don't turn overbought on the week because the market's too weak during the week. There's a lot of weeks in that. But we start to break down before we take out the upper bound, and then you get that potential bear flag set up into the profit taking target to the downside at the 102.47. Okay, so moving on to the dollar pairs, starting with New Zealand dollar. Just zoomed out here on the 4-hour chart so you can see, look at the trend to the downside. We have the consolidation and look at the momentum sell-off last week. So very much like we looked at in Eurodollar at the beginning of the video, suggestive of a correction breakout and actually just a wave one, you know, further downside coming over the next few weeks. That's what this chart tells me in and of itself without everything else we kind of put together. So if I zoom in onto the weekly range, then you can see that this is not a market that I would short down here because this is extended. I'd like to see this pull back and breach the 0.56692. Why? Because we entered the sell zone. The probabilities for a reversal go up significantly. And if that takes place, you can see there's no real prior highs. There's maybe one here, but this is a really nice low. We broke it with momentum, pull back, turn over, bought during the week above this level, hit the prior broken support turning resistance. I'm going to be looking right here next week for the bulls or the buyers to start to run out of steam, looking for them to liquidate for that 1 or 2 day reversal to the downside. If we end up above the 0.5740, again, big move down, big move up. No, it's not likely, especially without the catalyst next week. You know, trends, you get the move and then they kind of roll in that direction. Like I said, you know, you don't see, you know, a second bound hit one week, second bound hit in the other direction the other week, and then a second bound, it just doesn't work like that. So I don't think we're going to get here, but in the off chance that we do, above the 0.5740, we become extremely overbought during the week. This would be the second place I'd be considering a potential 1 or 2 day reversal and a short position. And the third and final thing, of course, we break up, we cross the moving average, we get close to it, but this market is so weak that you just get the momentum break back in the direction of the trend, and that sets up that first kind of move into the moving average, move away, bear flag set up into the sell zone at the 0.55268. Nice prior low over here, great for profit taking on any kind of short-term trades. But this could be the start of a much bigger move down with all the dollar pairs, just like we looked at in Eurodollar earlier. Next is Aussie dollar. I can only be a seller of this market or do nothing. I cannot buy this market. It's a little bit overextended to the downside. I'd like to see this snap back and trading above the 0.6287. That's where we enter the sell zone, where the odds of a reversal to the downside significantly increase. And this is where I'm going to be looking. There's not too much to the left, but this is where I'll start to look for buyers to kind of double top, head and shoulders on lower time frames, looking for those reversal patterns which indicate the buyers are getting fatigued and they're going to pull their positions. Looking for that 1 or 2 day reversal. We always look at the second upper bounds, but it's very unlikely that markets will get to these. But if we do, the 0.63658, this would be the second place. I'd be considering a potential 1 or 2 day reversal or short position. And the third and final thing is, break above the moving average, but again, it's so weak that it can't even become overbought during the week, and instead it sells off. The moving average follows it, and that first pullback is where you can get that bear flag set up into the lower bound, into the profit taking zone next week, below the 0.61306. And the final dollar pair before we move on to the Swiss franc pairs is US dollar CAD. Big reversal to the upside last week. What I'd like to see is this market is also a bit extended. All of the dollar pairs are a little bit extended. So I'd like to see this pulling back. And I'd like to see this breaching the lower bound at the 1.4338. This is where we become overbought during the week. This is where I'm going to be looking for buyers to run out of steam, especially if we take out this low right here, this support level. That would be a great place to start to look for a 1 or 2 day reversal and liquidation. Now that could also very easily, because of everything we've looked at, be the start of a third wave, because you get the one wave, you get the second wave, and then the third wave. Again, we looked at that euro dollar to the downside. So that really applies to all of the dollar pairs. The second thing I would look for, but again, I don't expect this at all because we almost took out the upper bound to the upside last week. But if we did come all the way back down and take out the 1.4206, again, that would be extremely unlikely, especially after what we saw last week. But in the event that it did do that, I would be looking for a 1 or 2 day opportunity to the upside, but you can almost dismiss that as extremely unlikely to happen. And the third and final thing is you start to pull back. We make our way down to the lower bound, but we don't quite get there because the market is just too strong. And you get the re-break, the kind of trend continuation, and that gives you your opportunity to look for that bull flag setup in this case into the sell zone above the 1.46018. So I can either buy this or do nothing. So the sell zone for me next week would only be a profit-taking zone in US dollar CAD. Okay, so wrapping up the Forex markets with the Swiss franc pairs before moving on to gold and silver. Starting with New Zealand franc, I can either be a seller or do nothing next week in this market. I like the fact that the sell zone sits right at this prior low. So we get a pullback, test the prior low into the sell zone. I'm going to be looking for this market to start to run out of steam, for reversal patterns to the downside. So double top, head and shoulders, looking for that 1 or 2 day liquidation. If we blast through, take out the second upper bound, although it's not expected, that is the kind of backup area above the 0.5166 where we become extremely overbought. I would also consider a potential short position for 1 or 2 days. And of course, we've already got the momentum to the downside. So you could very easily see this pull back, attempt to test the upper bound, and then again you get that sell-off. The moving average follows it. Get the pullback into the moving average, and that would be your bear flag setup down to the profit-taking target, the 0.4999. Next is Aussie franc. Again, I can either be short or do nothing. The sell zone in this asset starts at the 0.5667. So this is ideally where I want to see the market come up to. And again, a really nice low. So we kind of double top over here. One candle rejection, first degree breakout, comes back, fails. So it attempts to break out, and in the very same candle, it closes back down below. The weakest of all breakouts and gives us a double top, confirmed below there. So any pullback and a retest of this is going to be a great place in the sell zone next week to start to look for buyers to fatigue, to pull their positions for the next move down. Again, you can see quite clearly, yes, I'm looking for a short-term 1 or 2 day reversal, but this could easily be the point at which the next leg all the way down starts. So again, that's why I said at the beginning of the video, you could actually hold on some of these for longer if that's your style, if that's your strategy. But I will be looking for a 1 or 2 day reversal from there. If we end up above the 0.5728, again, I don't expect it, but it is the extremely overbought level. So you do want to have it on your chart, just pay attention to it. And that would be the second place I would consider a 1 or 2 day short. And again, because this is a weak market, if we don't manage to get all the way back up, and you get the break above the moving average and then back down, so it means you've had a correction, you've started the next leg down, that's where you can look for that bear flag setup into the moving average and away, into the profit-taking zone at the 0.55449. And the final franc pair is CAD franc before we move on to gold and silver. Again, I can either be short or do nothing. I cannot buy this market next week. So I would like to see this enter the sell zone, which next week is above the 0.6300. There is a nice prior low right here. The next prior high is quite high up. It's kind of above halfway. So this low right here would be great. We pull into it. We test the underside. So we stair step. And this would be where I'd be looking for buyers to start to pull their positions for a 1 or 2 day reversal. Again, I do not expect this at all because of the momentum to the downside, especially last week. But if we did take out the 0.6360, that's where we become extremely overbought next week. In a market, I'm looking to be short. So I would consider also a 1 or 2 day reversal from above there, whether I'm short already or not. And third and final thing is, if you are looking for that intra-week breakout, wait for the pullback, wait for the correction, and then you get the break, pull back and move away, pull back and move away. And that sets up your bear flag setup in this case down to the profit-taking zone at 0.6181. Okay, so wrapping up the video, as always, with gold and silver. I have a short preference for gold and silver, so I'm looking for short opportunities only. You may say, I don't like short gold because gold goes up over time because of the currency debasement. That's fine. You know, shorting gold is not a fantastic strategy, but on a short-term basis, I will take shorts and long positions in gold here and there for 1 or 2 days. So going into next week, I would prefer short positions, and especially with that bias in the DXY, if we're going to start to see it moving higher over the next few weeks, this is going to put downward pressure on gold. So I would like to see gold come back, breach preferably the 291581, and you could find very easily, especially if we start taking out these highs, that this is the second wave, because we're 1, 2, and then we start to get maybe a third wave down. Gold's pretty overextended as well, so it is due a correction. So I would consider potential 1 or 2 day reversal. If it takes out the second upper bound and I'm already involved, maybe I would consider one to cost average it, you know, for a break even if it pulls back, but I wouldn't add an initial position. Why? Because we've made a new high. Here's a high. We dip down. We take out the second upper bound. The trend has continued. You know, I don't really want to be shorting things in an uptrend. I want to be shorting things that are starting to move down, whether it's a wave 1, you know, and I'm looking to short here, or, you know, we're deeper into the trend. I don't really want to short something for a reversal, which is doing this, right? Because that's just trying to pick a high or pick the top, or, you know, catch a falling knife on the downside. You know, to the downside, I'm trying to catch reversals here, 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 right? And to the upside, I'm trying to catch reversals here, here. You know, I'm not trying to catch a reversal to the upside like this or to the downside like this at the bottom, right? I'm trading in the direction of the moves. And what we're seeing here is we're seeing this as a potential one way. So you can also look for that intra-week breakout, pulls back above the moving average, breaks back down, you get that bear flag set up into profit-taking target to the downside is 2799.08. But out of the two of them, I actually do prefer silver for shorts. It tends to underperform, especially in risk off, more than gold. So that would be my preference to the short side out of the two of them next week. So wrapping up the video with silver then, I would like to see this preferably next week above the 32.27. This is where I'll start to look left. There's a nice high. That's quite deep. So this one would actually be pretty perfect. And I'm going to start to look if we can trade into this area. Is this a good setup? Are we starting to see reversal patterns forming and bulls looking to, you know, start to fatigue, looking to pull their positions? If so, you know, 1 or 2 day reversals to the downside is what I'll be looking for. If we take out the 33.38, again, we're going to make a new high. So I wouldn't look at an initial position here, but maybe if I was already short, you know, I might look at a cost average. And the third and final thing, as always, if you start to make your way back up to the upper bound, you fail to get there because the market is so weak. And, you know, maybe the dollar explodes higher and we start to see this failing to come up. We get the sell-off, and then you can look for that bear flag setup in this case down to the profit-taking target of 30.06 next week in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.